Hey everyone, welcome back to Corporate Decoder, the place where we decode those cryptic corporate filings and find the juicy bits beneath the legalese. Today we're diving into Bollinger Innovations, Inc., and let me tell you, it is a bit of a wild ride, so buckle up. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we chat about this stuff all the time. So what is going on with Bollinger Innovations, Inc. or BI? For short today, well, it seems like the company is facing some serious challenges and is making some big moves, and not necessarily the kind of moves you want to see if you're an investor. The main story here is about their listing status on the Nasdaq stock market. It looks like they've been struggling to meet Nasdaq's requirements, specifically when it comes to the market value of their listed securities, or MVLs as they call it. Basically, their stock hasn't been worth enough for Nasdaq to keep them around on their main market. The company got a notice from Nasdaq saying that trading in their securities will be suspended starting on Monday, the 13th of October 2025. This all stems from a previous notice they received back in February. Nasdaq told them their MVLs was below the minimum required, which is $35 million. They were given 180 days until the 25th of August to fix this and get back up to par. But unfortunately for Bollinger Innovations, they didn't. He managed to do it. They had a chance to appeal this decision with a hearing, but they withdrew their request. So what happens now? Well, as of the 13th of October, their common stock will no longer be on the Nasdaq Capital Market. Instead, it is going to start trading on the OTC markets, specifically the OTC market, and they LL still use the ticker symbol BINY. They say they L still have to follow the same reporting rules as before, which is good. But moving from Nasdaq to the OTC markets is generally seen as a step down. Think of it like moving from a major department store to a smaller, more specialized shop. The products might be the same, but the prestige and visibility are different. Even though they are still going to be a publicly traded company, this move is a pretty clear signal that they are having financial difficulties. Now, there is another interesting development happening behind the scenes. On the 30th of September, the company filed some amendments to their corporate documents, specifically dealing with their Series F and Series G convertible preferred stock. These aren't the type of stock you and I usually trade. Convertible preferred stock is a bit more complex. It is a type of stock that can be converted into a certain number of common shares, usually at a specified price or ratio. What happened here is that they increased the number of authorized shares for both Series F and Series G preferred stock. For Series F, they went from about 30,000 shares to over 100,000 shares. For Series G, they increased it from around 116,000 to about 126,000 shares. They also made changes to the definition of an exchange agreement and created 3 new serial designations for the Series F preferred stock. Now, why would they do this? Increasing the authorized number of preferred shares often signals that a company is planning to issue more of this type of stock. This could be to raise capital, perhaps to cover ongoing operational costs, or to fund future projects. It is a way to prepare for potential future funding needs, but it does mean they are diluting their existing shareholders. To spread the word about their move to the OTC markets, Bollinger Innovations issued a press release on the 9th of October. This press release is technically part of this filing as Exhibit 99.1. Now, the report includes a section that is pretty standard but important to pay attention to: forward-looking statements. This is where the company talks about things they expect to happen in the future. They use words like will, may, expect, and potential. They're basically warning you that their future plans involve risks and uncertainties. They list a bunch of these risks, like whether they can get more financing, maintain contracts, expand into new markets, manage acquisitions, deal with competition, changes in regulations, consumer behavior, protecting their intellectual property, and the general economic conditions. They mention that moving away from Nasdaq could help them save effort and cost on meeting Nasdaq's listing standards, allowing them to focus more on their business strategy. However, they also acknowledge that there is no guarantee brokers will continue to make a market in their stock, or that trading will continue smoothly on the OTC markets. They're also hinting at the possibility of returning to a US national exchange or listing on an international exchange in the future. This is typical language for companies facing delisting, trying to put a positive spin on a negative situation. Finally, the report lists the exhibits, which are basically the supporting documents. We see the certificates of amendment for the Series F and G preferred stock and the press release about their move, and then there is Exhibit 104, the cover page interactive data file, which is basically a computer readable version of the filing. So let us wrap this up. Bollinger Innovations is clearly in a tough spot. Their stock value has dropped to a point where they can no longer meet Nasdaq S listing requirements. This forced move to the OTC markets is a significant setback and signals underlying financial difficulties. The amendments to their preferred stock offerings suggest they are likely preparing to raise more capital, possibly through issuing more of this preferred stock, which could further dilute existing common shareholders. While they are trying to frame this as a way to refocus on their business strategy and potentially return to a major exchange later, the reality is that moving to the OTC markets is a downgrade. The risks they've outlined are substantial, and there is a real question about their ability to operate successfully and attract necessary funding in the long term. It seems like the company is fighting to stay afloat, and investors should be very cautious. Alright, that is our breakdown of Bollinger Innovations' latest filing. What is your take on these numbers and what they signal for the company? As future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.